At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth, so find out if you qualify at peoplescapitalgroup.com. All right, ladies and gentlemen, welcome back to the Passive Cash Flow Podcast. I'm your host, AaronFragnito, and today's topic is real estate investment strategies guaranteed to succeed in 2022. Now, I never like to say the G word, guaranteed. In fact, whenever I'm talking to an investor, I never say the G word because the SEC restricts me from saying it. I can't guarantee anything. I'm not a bank. We're a real estate fund here. We help people invest in real estate. We have a pretty darn good track record, but nothing is guaranteed because you can't guarantee a return unless you are a bank. So we're going to talk about investment strategies that are guaranteed to succeed in 2022. So let's break right into it. By the way, if you're enjoying our content, make sure to hit that like and subscribe button. Maybe you're following us on YouTube or Spotify or Apple iTunes. Make sure you subscribe to our podcast here with new episodes every single week on the Passive Cash Flow Podcast. All right, so why real estate investments are crucial for your success. All right, we find that most people are unfortunately 100% invested in the stock market, and they really need to diversify into real estate a little bit. But the hard part is, how do you do that? You know, finding a building, managing a management company. Is it the right building, the right location? Where do you start? What type of real estate? Well, that's what this podcast is all about. And in this episode, we're going to break right into it here. So you want to look for stability of real estate investment strategies, right? Investment strategies that fit your investment goals here. One of the reasons we like investing in apartment buildings is because, well, they are very stable investments with long-term leases and demand through recession as well. So we look for buildings that have consistent realty demand, okay? There's jobs around them. We buy in the North Jersey market where there's consistent demand. And we also look in areas that there's a huge amount of population growth and population density, which is pretty much all of North and Central Jersey. So one of the reasons also, one of the best investment strategies here in real estate is investing for equity, wealth, and diversification. Right? Those are three big buzzwords that we find in real estate. Equity is the difference between what a property is worth and what is owed on the mortgage. Your wealth is, well, based on your equity essentially. It's going to grow over time as inflation forces the value of real estate up, and improved management as well, and buying for a discounted price. And then, of course, diversification, just in general. Being backed by a brick and mortar asset is one of the best real estate investment strategies that are going to allow you to guarantee to succeed, just in general, 2022 or not. Having a brick and mortar asset that's always going to be in demand. See, people always need a roof over their head, and that's one of the reasons diversifying into real estate is always a smart strategy. But real estate investment appreciation is something that really it tends to be guaranteed as well, as long as you're improving the property over time, doing the things it takes to renovate units, lease them for top dollar, but also owning real estate in areas where the demand continues to grow, population continues to grow. In areas like North Jersey here, we see that continuation in investment appreciation. It's not only because we're improving the building, but we're also buying in cities that are overall improving in real estate value as well, because more and more people are moving there and they all need a place to live. So let's talk about how to accelerate real estate appreciation. That's taking a mismanaged building, improving the management of it, improving the collections, and increasing the rent roll, doing physical improvements to the building and leasing out those units for top dollar, figuring out how to make more forms of income on the property through parking or storage or laundry, and then also lowering the expenses maybe through a tax reassessment or just improved management. These all can accelerate the real estate appreciation. That's called forced appreciation, and that's a way to guarantee the value of your building is going to increase. See, I know for a fact that if I can increase the rent roll on my building from $10,000 a month to $12,000 a month by doing all those avenues I just explained, well, that's going to allow me to increase the value of my property, and that's going to force the value up. No matter the market's down or market's up, that's still going to increase the value of my property. So that's a guaranteed return on investment by forcing the value up on our property, and that's called accelerating real estate appreciation or forced equity as well. Now let's talk about the tax advantage of real estate investing, because the tax advantage are also a guaranteed part of the investment strategy here, because we know that real estate offers tax deduction, tax depreciation, and the 1031 tax deferral. So first of all, real estate has a ton of deductions, so we can write off most of our cash flow with all the costs to manage and own real estate. Secondly, we have tax depreciation, which is really a number that the IRS allows us to take off the building every year, even if it's not a concrete cost. Because you see, that real estate depreciates over time, and it kind of falls apart and things like that. It costs to maintain it. So because of that, the IRS allows you to depreciate a certain amount every year, even if you're not writing a check for that amount. So it's paper write-offs, essentially. And then we have the 1031 tax deference. See, we plan on utilizing this tool down the road. We plan on doing a cash out refinance every 3 to 5 years for about a 12 to 15 year period. So by year 6 to 8, our investors have made back their entire investment. They continue to cash flow and enjoy cash out refinances and large lump sums upon the refinance every 3 to 6 years. And our goal is to eventually, after doing a number of cash out refinances and cash flowing all along as well, doing a 1031 tax deference and selling the building and trading into a bigger property that's building our investors' wealth exponentially, building legacy wealth long term that they can hand down to their heirs. And that's our ultimate goal for most of our properties, is doing a 1031 tax deference, deferring all capital gains tax, all income tax, and trading into a bigger property and just building that wealth exponentially for our investors. That's an amazing tax tool that the billionaires and the wealthy have been using for years, and that's the tax tool we bring to our investors so that everyday investors that aren't millionaires or billionaires can exercise the same strategies, the wealth exponential growth strategies that the billionaires execute here in real estate by investing with People's Capital Group. So also preparing for realty investment, right? Understanding what's your investment goals, how are you going to achieve those goals through real estate? Okay, there's lots of different options. There's commercial real estate, there's residential rental properties, there's publicly traded REITs, and all these different options can help you build wealth through real estate. So first of all, rental properties are the most common form of how people build wealth in real estate. You could buy a 2-family or a 3-family down the street, or you can consider investing in larger buildings. Bigger is better generally when it comes to real estate. It's easier to make returns off of bigger properties and more units under one roof. And investing with professionals tends to be a very common way that savvy investors get into real estate and diversify some of their wealth into high demand real estate by working with a real estate syndication and teaming up with professionals. You also have another strategy here, the rental debt snowball. This is a cool strategy where you're essentially taking all the proceeds from a property and using it to pay down the mortgage as aggressively as possible. The mortgage principal, ideally, right? Now, the cool thing about real estate is your tenants are going to pay down your debt for years to come. So that's the most amazing part about real estate. When you own a single family home and you live there, well, we all know the pain if we have that. I have a mortgage payment, right? So I got to pay that mortgage payment every month to my bank, and I get the mortgage statement that shows me that like most of what I'm writing to my bank goes to interest. Fine, but you know what? On my income properties, my tenants are paying down that mortgage. So I don't feel it, right? And at the end of the day, eventually that mortgage will be paid down completely. But imagine you took all the proceeds from the property after paying your other expenses, and instead of taking a cash flow check, you just applied it towards paying down that mortgage principal. That's a rental debt snowball is, and that eventually is going to pay off your principal much faster and allow you to own the property free and clear, allow for better cash flow. You can also purchase tax liens. That's a way of foreclosing on real estate and taking ownership of the real estate without having to go around and shop around with a realtor or go against bidding wars at auctions or things like that. However, tax liens are often sold at auctions and there can be bidding wars against them. So there's still a lot of competition to buy tax liens as well. You can sell the tax lien for a profit and earn a nice interest on your investment, or you can go to foreclose on the property and try to take ownership of a property at a very discounted price. So those are two very separate strategies, but both are started and completed through tax lien investing. Tenants and maintenance. So whenever you're buying a property, you want to recognize there's costs to managing the tenants, to maintaining the building, to upkeeping it. And if you think you're a handyman, you're going to fix every single problem, you're a plumber as well, and you're a leasing agent, and you're a collection specialist, well, at the end of the day, you're going to get burnt out doing all these things. Now, maybe managing a couple condos or a few duplexes or a 4-unit or something like that is pretty reasonable. Or maybe you own a couple condos in a nice area and you have good quality tenants and it's not that much work. But as you build a bigger and bigger real estate portfolio, as I did, I got up to about a dozen units and I was dealing with tenants and toilets all day long. So I started to hire management companies, and then, boy, it got even harder because they were just screwing up even worse than I was. So I ended up developing our own management company around 2015, and that's been all the better and allowed us to, of course, manage our properties very closely and produce really strong returns for our investors. So here's a few more ways to guarantee an income in real estate. Now, I don't really suggest this form, but it is a way people make money in real estate. House flipping, buying a fixer-upper, improving it, and selling it for a profit can always be a profitable way to make a profit in real estate. But watch out as repair costs are increasing, labor costs and material costs are increasing right now a lot. So that could be somewhere with a lot of headwinds. At the same time, property values for single-family homes are kind of decreasing. So your ARV or after repair value is going to decrease through the months it takes to renovate the home. So it's really not a great time to be house flipping. Now, house hacking is actually a better strategy, really. That's when you live in the house, you live in one of the units, and you rent out the other units. So maybe you live in a 3-unit, you rent out 2 of the units to other tenants, and you're able to cover your costs that way and live for free. Or maybe you bought a fixer-upper and you're going to fix it up while you live there and kind of unfortunately live in a bit of a construction zone for a few weeks or months or years perhaps, but over time, renovate the property, increase the value of it, and sell it for a profit. Both are ways where you're living in the home with your family, so there is that added level of discomfort. You could do this with a multifamily home. You could do it with a single family home. You can fix up a multifamily as well, right? You could just buy a single family for a good price and sell it for a profit a few years later. But the idea is you're flipping your real estate that you live in to create wealth, to create value, and build your wealth over time, but also living there with your family. And if you do it right, creating profit while living there for free, and it can really be a great wealth strategy overall. And there's tons of benefits to house hacking, so check that out. I actually did a webinar on it a few weeks ago. You can check that out at peoplescapitalgroup.com. So of course the idea is to always scale up your real estate investing, continue to diversify your investments, but really scale up your wealth over time. That's the whole grand idea here. And by using a mortgage to leverage your down payment, you can buy properties for maybe 20% down or even less if you're living there. You can also invest in real estate syndications with as little as $25,000 or $30,000. See, our minimum investment is $30,000. So people can get invested in real estate with as little as $30,000 and own a multi-million-dollar asset that they normally would never be able to own with such a small investment. But that's the magic of real estate syndication. Also, accreditation is generally required to invest in real estate syndication. So if you contact most real estate funds, they're going to say, sure, you can invest with us, but you have to be an accredited investor. That means you have to have a net worth of $1 million, not including your primary residence, or have a household income of $300,000 or a personal income of $250,000. If you don't make that cut, then you're not an accredited investor. And most real estate funds, real estate syndications, are not going to accept non-accredited investors. Now, we accept non-accredited, sophisticated investors because we're People's Capital Group, and we want to accept as many people as possible. So if we only accepted millionaires, well, most people aren't millionaires, so we would be leaving a lot of people out in the cold. So that's why we developed the type of fund we have, where we accept non-accredited, sophisticated investors. That means you have some experience reviewing investment opportunities. Maybe you've bought a home or you've looked at other investment opportunities in the past. You have the mental capacity to understand the risks and the investment there. You also don't need to live on the returns of the investment, the cash flow to cover your living expenses, and you have excess savings and income. So as long as you meet those categories, then you likely would qualify as a sophisticated investor, which essentially opens up the door to people with some experience and the mental capacity to understand the opportunity, and a minimum investment of $30,000 plus some excess savings. So really opens up the door to a lot more people, everyday people looking to get started diversifying into real estate and take some of their wealth and diversify it out of the stock market into a brick and mortar asset class that's professionally managed, produce wealth creation, cash flow, and tax benefits over time. So that's why we created People's Capital Group, and that's why we accept non-accredited, sophisticated investors. We also accept accredited multimillionaire investors and work with them as well. We pride ourselves on working with both. Let's talk about real estate wholesaling. So this is another way to make profit in real estate. We've done this over 100 times, Seth Martinez and I. That's when you put a property under contract and assign the contract for a profit. I wouldn't say this is a guaranteed way to make money, because you got to find a great deal, and then you have to find a buyer to buy that deal quickly for a higher price. So it's actually, it's a little harder than it sounds there. It doesn't even sound that easy, really, and we've done it hundreds of times, and lots of gurus will say, well, get started by real estate with wholesaling. And I say, nay, actually, get started in real estate by being a realtor, really. If you want to be a full-time real estate person, then being a realtor is actually easier than being a wholesaler. But wholesaling can get you access to great deals, and you can become the deal person and learn how the deals work, and also get deals coming in the door of discounted properties for sale if you're doing your marketing right as a wholesaler. And that's going to allow you to have a lot of options to either own real estate or start flipping real estate, or heck, just wholesale the properties and make a nice fee on the back end, right? Real estate investment trusts, REITs, are another way to get invested in real estate. Now, there's different types of REITs, okay? We're going to talk about publicly traded REITs. These are stocks backed by real estate. So it's worth mentioning, but remember, when you own a stock backed by real estate, you don't get all the tax benefits of real estate. Okay, privately traded REITs can offer those tax benefits, but publicly traded REITs, stocks backed by real estate, don't always offer those tax benefits. So there's equity REITs. These are majority REITs. They own and manage real estate with revenues mostly coming from the rental income. Then you have mortgage REITs. These REITs lend money through mortgages, loans, and various securities. Earnings are derived from the differences between the mortgage loan interest and the mortgage loan costs. And then you have hybrid REITs, where essentially that's a combination of both mortgage and equity REITs. Okay, so that's the final option here, a great way to make income in real estate. Now, again, I wouldn't necessarily say any of these ways are guaranteed to make a return on investment, because nothing is guaranteed in life. Real estate is a strong investment, but it's not guaranteed to work. You have to know what you're doing. You have to buy for the right price. Know who your tenants are going to be, or who your end buyer is going to be. Are you going to wholesale, flip it, buy and hold? Do you want to do apartment buildings or small houses? Do you want to house hack, or focus on just investing passively and letting other people do the work while you enjoy the benefits of real estate investing? So for the most part, the only way to make sure you're earning a return on investment that's strong and consistent is by having a good team in place and teaming up with a strong real estate syndication that has a good track record and their investment goals align with yours. So if you want to learn more about our investment goals, go to peoplescapitalgroup.com. Check out our weekly podcasts, our monthly webinars. Make sure you subscribe and like our podcast here so you can enjoy our episodes every single week. And go on our website, peoplescapitalgroup.com, and when you're comfortable with us and when you're ready to invest, hit review opportunities in the top right corner, fill out that application. Let's set up our discovery call so I can get to learn about your investment goals and answer your questions about how we help people invest in real estate and how we've been doing this for the last decade. It all starts at peoplescapitalgroup.com. Hope you enjoyed our topic today. Stay subscribed for another episode next week. Thank you.